Hi, I'm Neil Carstairs from Mortgage Corp, your property investment specialist. We've been getting so many phone calls lately from existing clients, new clients, people just ringing up for general advice, asking us, can we get better interest rates? Is it best to fix it or stay variable? Is it getting harder to borrow money? Should I buy now? Should I look at buying a house I want to live in, or should I be buying an investment? Which bank has the best deal? Which bank's lending more money? If I lose my job, how do I defer my home loan? I'm going to go through these really quickly with you now and try and give you some advice in going forward during this COVID pandemic time. Rates. Who has the best rate? And how do I get the best rate? This question was before all of this and will be asked forevermore. What is the best interest rate? That is dependent on you, your income, your equity, the valuation of your house, the type of income, whether you've got overtime allowances, all of these sort of things that come into play. There are some really cheap interest rates at the moment, well under 3%, close to 2%. But are they for you? You need to be able to work this out and get good advice. Should I fix it now, or should I stay variable? And obviously having a variable rate versus a fixed rate has its advantages and its disadvantages. Having a fixed rate right now means that if you were to lock it in for the next 2 years and then something happens to you, your job, or you have to refinance or sell the property, there is a good chance you're going to be up for break costs. The reason why is that you've bought that money on contract for a set period of time, which means that if you were to break that contract, there is an economic cost, and the bank will claw that back out of any equity or out of the sale of a house, or if you go to refinance. So be really wary on when you want to fix your home loan. Now, here's a tip. You can get an offset on a fixed rate loan. Not many people know that, and not many people will tell you that. There are some niche products in the market where you can actually fix rate a home loan now for below 2.5% and have an offset account fixed. Now, it might be partial offset or it might be full offset, but I know of a couple of lenders that are offering offsets on fixed rates. That's a tongue twister, that one. Would you stay variable right now? Again, that's up to you. Variable will offer offsets. It will offer redraw, and it'll offer the opportunity that if interest rates come down, your repayments will come down. But if interest rates go up, then your repayments will go up. It gives you flexibility. There's no early repayment fees with a variable rate loan. There is a break cost, usually what we call a discharge fee, ranges from $250 to $400 depending on which bank. Obviously, it's in your contract and it's called a discharge fee. There are no break costs on variable rate loans in the residential space. Would I go fixed or would I go variable? Me personally, I am looking at a variable rate home loan for myself right now, and I'll be sticking to that until I see things get a little bit sharper over the next few months. We don't know what's going on, and I might want to sell or refinance down the track. So I just want to protect my interest. Is it harder to borrow money right now? Answer, yes. Why? It's industry related. We're getting emails from different banks every day telling us which industries they will and won't lend to, what type of income they will and won't lend to, whether it's overtime. If you're in essential services and you're getting overtime and you've consistently got it, there's a good chance that we'll be able to use that income. If you're working in a factory or in a transport company and you're getting overtime, it will be looked at differently. If you're getting bonuses and commissions, we're probably going to be disregarding those over the next couple of months. All of these changes and all of these policies are happening daily. In the last 2 weeks, I think I've seen probably more than 15 different changes on types of income, types of industries, types of security, mortgage insurers. A lot of things are changing just in the last couple of weeks. So can you imagine in the next few weeks? So is it getting harder to borrow money? Yes. What type of loan? Can you get cash out? We just did a deal for a client recently and we were able to get our client over $200,000 or under $200,000 worth of cash out of equity. Everything stacked up and the bank was happy to do that. Low LVR. So that was well under 80%. Anything above 90% is going to get a lot more scrutiny. The most important thing to consider right now is that if you have a pre-approval or seeking to get a pre-approval, You need to be really careful, okay? Because if there's anything that's going to happen with your employment, just because you've got a pre-approval doesn't mean you're going to be able to get formal approval. What they're asking is that they're asking before formal approval, we give them bank statements that show that your salary has been going in for the last 2-3 months consistently within 14 days of formal approval. Some lenders are even asking letters from employers to say that you're still employed, pay slips, evidence of salary crediting, and all of that. So even though you're pre-approved, be really wary that if anything happens to your lifestyle or your life, then we're going to have to prove that before your loan goes to formal. So you need to be really wary. Obviously, being in whatever occupation you're in, you also need to make sure you speak to your broker in regards to making sure that you are protected in regards to wanting to borrow more money. So am I going to be secure? Am I going to have employment security? That's the big one that we're looking at right now. Should I buy? This one's a really hard question, okay? Because you've got your owner occupied and then you've got your residential investment. If you're buying an owner occupied, you're in a secure job, you've got a good deposit. I don't see a lot of movement in the market at the moment, but I do see that if it's going to put a roof over your head, you've got an approval from a bank, you've got job security, okay, and you've got savings, because I am the king of buffers. As long as when you buy this house, you've got money on the side to cover you for any emergencies or lack of income or any works that need to be done, that you've got that in the bank. So things to think about when buying your owner occupied versus buying an investment. I mean, buying an investment right now, who's going to be the tenant? Are they going to have a secure job? Are they obviously not being able to be kicked out in the next 6 months? They still have to pay their rent. If they don't pay their rent, getting landlord insurance right now is nearly impossible. You can get building insurance, but you can't get insurance on your rent. We've found that with 2 or 3 of the bigger insurers that we deal with, they're finding it a bit hard, in fact impossible, to get tenant or landlord insurance on the rental side of it if they don't pay their rent. So be really careful and get some legal advice on your lease agreement with your tenants. If you are going to make a claim, there is something that you need to do. Defaulting your tenants and then applying because your tenants haven't paid, or going into payment plans, all of this sort of stuff. You will need to seek some advice on that in going forward. So should I buy an investment property right now? I'm being patient, and a lot of my investor clients are being patient and wanting to see what's going to happen over the next couple of weeks, the next couple of months, for ourselves as well as for the opportunities that are going to arise in the next 3 to 6 months. If people are deferring their home loan repayments and then realizing they may not have the job to go back to, we may see some more properties coming on the market within the next 3 to 6 months or later. Patience is going to be king when it comes to this, and not pulling the trigger too early. Now, the last thing is deferrals. If you have or are thinking that you won't be making any money, having a job or getting income in the next couple of months, you need to go to your lender's website and follow the process that each lender has with deferring your repayments. Remember, it's a deferral, a freeze. It's not a forgiven. So in other words, you will have to pay that back, and think about that. Some of our banks, or some banks, are saying we won't charge you home loan repayments for 6 months, but at the end of 6 months, you have to go into a payment arrangement, and your repayments may increase to cover the interest over a set period of time. So be really wary of that coming out of your deferral period. Secondly, before you defer, maybe look at switching your product to a lower rate. Okay, so some of our clients, we've been negotiating better deals for our clients, as what we always do when we talk to clients in regards to what other opportunities are out there. We always try to go back to their own bank and ask for a better deal. And in doing so, in the event that something happens down the track, obviously you're going to be deferring your home loan repayments at a lower rate versus at the current rate. So always do that first, all right? And we're here to help with that. Secondly, if you've got any redraw, so if you've been really good and you've been paying extra on your home loan, maybe now's the time to take it out, potentially, and put it aside for emergencies. Because in a deferral case, we probably are seeing some banks, who are freezing redraw. I think it's an important thing that if you've spent the time and you've taken the effort to make extra payments, that's a forced savings plan. That's your money. I'd get that out and put it into either an offset account or into another bank account, then switch our repayments to a lower rate and get yourself ready if in the event something does happen. And when it does, you've prepared yourself and you've planned. With deferring, we're hearing a lot of people saying, will it affect my credit score? We heard the ABA came out and said no. So the Australian Bankers Association had come out and said it won't reflect on your credit score or your credit rating. But if you did at the end of 6 months have a deferral and you decided I wanted to refinance, well, the chances are you're not going to be able to, because you need to show 6 months worth of repayment history, even though you've probably gone back to the same job on the same money and everything else is great. But now your repayments are going to be higher. We want to see at least another 6 months worth of good repayment history before we can refinance you out. So make sure you maintain your good credit rating with your other debts, credit cards, car loans, leases, novated leases, store cards. Either get on the phone to these people and get in front, but don't let it affect your credit score, because coming out of this very challenging time, we want to be in the best position possible for the opportunities that are going to present themselves in either buying our houses, refinancing, getting the best rate. It's all going to come down to how we deal over the next 3 to 6 months. I'm Neil Carstairs, your mortgage investment property specialist, and reach out to us anytime. Go to mortgagecorp.com.au.